know if you are familiar with this indicator. Basically, it is an oscillator rather than a moving average, which you have on your chart. RSI is very similar to stochastic indicator or to the MACD indicator. So if it's an oscillator, it will have certain limits in which it will move. And these limits are the 100. So this is the maximum that the RSI can reach, and 0, which is the minimum. Now you most probably will not have a chance to see 100 hit or a 0 hit, because in my last 11 years of experience in the trading area in the markets, I have never seen these levels reached before. But besides these two, there are two that we use as benchmark, and this is mostly a default overview. I have the RSI here. Let me just add it again because I did it quite fast, so I would like to add it again. We have periods, so this is the number of candles which the RSI takes into consideration when it does the math in order to draw the line. You can add 21, you can add 50, or you can add even more than that. And also you can go lower, like 7 or 4. Let me just show you some differences between them. So we have the 14 RSI. Let me add another one. Let's say 25 RSI. And also, let's add a 7 period RSI. Okay, so we have the 14 RSI here on the top. Second is the 25 RSI, and last is the 7 RSI, 7 period RSI. If you look at them, you'll see that if you increase the number of periods, then the RSI will not go as high as it did before on the 14th, for example. And if you are lowering the RSI, then it will go even higher than it did for the 14. So 14 being somewhere in between, I would rather say that the 7 RSI, it's sensitive. So you will see that it moves a lot and it is quite aggressive in its turnings and also reaches higher levels. If you go higher on the 14, then the RSI smoothes out and you'll see that levels are lower. The higher levels that it reaches or the lower levels are actually smaller than the 7 RSI. And the 25 RSI, as you can see, it goes even lower than that, and basically most of the time will remain between the 30 and the 70 levels, which are benchmark for trading with the RSI. I would love if you can help me out and do not make any annotations on the screen, because it seems that you are able to do that and the screen will get very crowded soon. Okay, let me get back to our presentation. I have disabled this option. If you would like to ask something, or if you like more information about what we are discussing here, please write on the chat and I'll try to answer to all of your questions. Coming back. So we have three types of RSI here. We have the 14 period, the 25th period, and the 7 period. RSI is drawn on the chart. I usually am using the default one, which is the 14 period RSI. But if, for example, you will need to go on a higher time frame and you like to look back for a longer period of time, then if you're using, I don't know, 4 hours chart or daily chart, then you should be looking at the 25 RSI. If you are going on lower time frames like M1, 1 minute or 5 minutes chart, then you should be looking at using the 7 RSI because it's a bit more sensitive and it will help you a lot with price action on these time periods. Let me just remove the 7 and the 25 period RSI. I'll be using mostly the 14 period RSI due to the fact that my trading style is done, I would say 70 to 80% of the time on H1 and 30, sometimes on H4, as you can see here, to just look at the larger overview for a certain instrument. So right now on euro dollar, we have an H4 chart, so 4 hours chart. I'm still using the 14 period RSI because it gives good signals and you can easily read it. Coming back to the RSI, I was telling you that there are two very important levels, the 70 level and the 30 level. While if the RSI breaks about the 70 level, so right now I'm giving you the theory for the RSI, and after that I'll be showing you how to use it and how I'm using it in my strategy, because it's not the classic theory that I'm gonna use, but you need to understand how the RSI works in order to apply that strategy. So coming back to the RSI, you can see that the RSI moves above the 70 level, which is right over here. The theory says that if the RSI moves above this level, above the 70, then the market is overbought. So the price has reached a limit when buying on the upsell, on the up market. And it is expected for it to drop, so to come back below the 70 price. 70 is right here. As you can see, the RSI moved above the 70, the price moved up again, but the RSI continued to stay somewhere around this level, coming back just a little bit on this very small correction. And after that, going above 70 on the next move, coming back down, and so on and so forth, up until here, where it started to come down. Now, from my experience, most of the time you'll see these kind of patterns. So the RSI moving above the 70, coming back down, but the price would still continue to go upwards. But this is a normal thing, because it doesn't mean that if the RSI drops below 70, which is the theoretical signal for the RSI, if the RSI drops below 70 after it broke above, then this should be a selling signal. This is what the theory says. I'm not gonna say it again. So for those who have entered a bit late, we have this webinar recorded. Please ask your account manager to give it to you after we finish the event, because it's not fair for those who have entered earlier to repeat myself, and the time will lapse and we will not have enough to go over the entire strategy and give you some examples on the chart and do some examples with you. Coming back, dropping below 70 would be the signal given by the RSI in order to sell. So this is the theory, but the theory As you can see in this specific example, it's not suitable for trading because the corrective movements right here are very small, and while the RSI remains on a sideways move just above the 70 level, the price reaches new highs. The same thing is available also for descending moves. As you can see here, the price went above the RSI, went above the 70 level, and after that dropped and continued on the downside with the trend where it went below the 30 level. On the downside, we have the 30 level, which we need to look for in order to get some ideas if the market is this time oversold. So we have overbought above 70, oversold below 30. In this case, the price went below 30, and after that, with the breaking here, it didn't go up. It had another dip, as you can see right here, it had another dip, while the RSI didn't go below 30 this time, and only after that it started moving up. Well, the price, I mean, and the RSI followed, as you can see, moving all the way to 70, somewhere around here, dropping again, so on and so forth. Coming back to the basic idea of the RSI, it gives us overbought signals for, let's move a bit to 1 hour chart and see whether we have here some examples. 1 hour chart, we have here an example, we have here, we have here. So RSI most of the times gives us overbought and oversold markets, but we need to filter out all these false signals, as I was showing it to you a bit earlier. We need to filter out the false signals and come up with a strategy that can actually give us a higher probability when it comes to placing a trade in the market. And what I love about the RSI, and it's not the thing that you will only encounter on the RSI, you will encounter it on most of the oscillators that are available to you on both platforms, I mean Xstation and MT4, like stochastic, MACD, and so many others. But I like it more on the RSI rather on stochastic and MACD. And that is the divergence. So what is a divergence? Basically, let me give you an example. I believe right here we have one exactly. So let me zoom in a bit. We should be looking for a divergence when the market is on an uptrend. As we can see here, we have an up move. Now this up move, it actually makes higher highs. So we have higher highs. Of course, we also have higher lows, and so on and so forth. But look at what the RSI is drawing right below. So if I'm going to use this one, actually, let me just use the crosshair. We have here a high, which is related to this one. The second one related to this one. Now going forward, this will be very interesting because we have another high here. The price continued to move up, so we had another one here. Now look at what has happened from this point on. Though the price made another higher high, the RSI did not. We have a lower high here comparing to this one. I hope it's rather clear. Higher highs on the price, lower highs on the RSI. Continuing forward, what do we have here? We have another higher high with a higher low, but the RSI didn't manage to break above the previous high. Now, this is what I consider to be a divergence between the price, which has drawn higher highs, and the RSI, which barely remained at the same level of 75. So this is to be considered a divergence between the price movement and the RSI. When you see a divergence like this, especially if it is drawn from 2 to 3 highs, you'll even see divergences with even more higher highs, let's say 4 or 5. Those are rare, but in most times you'll see either one high and one higher high, which will be these two on the RSI, but I'll show you some other examples. And the best one would be with 3 tops on the price movement and a divergence coming from the RSI. Now this is perfect because I can show you right from here how my strategy works. Now in this situation, let's say we would have been around here. At this point, we see that we have a higher high in this area, we have a higher low, everything is good. I should remind you that higher highs and higher lows are very important when it comes to price action. So you need to follow the trend, and the trend is given to you by the evolution of the highs and lows. If you have higher highs and higher lows, it means that you have an ascending trend, while if you have lower highs and lower lows, you have a descending trend. This is very good because it will help you enter in the right direction if you want to trade on the trend, but you could also find very important turnarounds. So for example, a start of a correction or a start of a new trend when it comes to turning points. Well, the RSI with these divergences and what I'm about to show you can actually give you both an end of impulse, end of correction, or end of a trend, depending on what time frame you're analyzing, and of course depending on your trend. So coming back, we see that we have another higher high here, while the price has moved higher, the RSI moved lower. So we have our first divergence right here. This is our first signal. Now we are trying to move forward and see whether right now we have a low. Let's see where this low is going to stop. As you can see, the price didn't go below this low, so we don't have a low here or here. Especially we have a low above this one, which makes it a higher low, but this is our low at this point in time. The price started to move up and the RSI started to move up. Now let's see what happens. Going forward, the price is still moving up and up. The RSI got to the resistance level, which is a 75 level on the RSI here, given to us by the previous high. And while the price already reached new highs, and it gives us, we have here a shooting star, gives us a good signal that it could start a new corrective move. Look what happens. So this time we are trying to find ourselves a new low, and we have it. The question remains now, what will happen with the price? Will it reach a new higher high above this one of 113.48 and continue the trend, or will it breach this low? Look what happens. The price moves lower, so we have a new low around here, 113, which is a very good support area. And looking back, we have a resistance here, so we are on a very strong support level right now, and this being 113. The price is trying to move up and create a new high, but it doesn't go above 113.26 and it drops. Now, as long as you are using the RSI and price action this way, you'll understand that the best moment to enter a trade would be in such a scenario after breaking this 113. So we have a higher low here, have a higher low here, and we have a higher low here. The price doesn't go above, doesn't reach 113.48 in order to create another higher high, and breaks below 113.00. In the meantime, you can also see, and this is why I love RSI more when it comes to divergences rather than MACD and stochastic and any other, is because it also gives you support and resistance level. I showed you 75 as being a resistance, which gave us the divergence. And now I'm showing you that it also gives us a support level. This 54.8, it is a support which was from here, the price went here, RSI dropped, price moved up, RSI dropped, it reached 54.8, again up. It didn't manage to go higher, as you can see with the price, and broke below. On this here, on this drop, we had a broke below 113, and this is, from my point of view, a good moment to enter a trade. As a parenthesis, please don't take these as recommendations of trading. This is something built from 11 years of experience, and I'm showing you a strategy which works for me on a daily basis. You will have to try it out, to test it before you commit to it and before you can say if it works or it doesn't work for yourself. This is a strategy that I have tested and I have traded for a long period of time. I did several changes to it during these past years, and I'm giving you now a form which you can actually take and apply it to your kind of trading. This would be the entering of the trade. Coming back, look what happened with the price. Went lower, lower, and reached 111.89. If you are using this strategy, I should also be telling you that it's very important for you to set a stop loss, and the stop loss would be right above the previous high. So in this scenario, you have 113 and 113.49. Don't forget it's a 1 hour chart. So we have around 50 pips right here. And if you are using a 1-to-2 or 1-to-3 risk-reward ratio, then let me just make it easier for you to visualize it. If you are risking this much on your trade, sorry, was this much on your trade, because that would be the entry point, breaking below 113.00, then you would want to get at least 1-to-2 or 1-to-3, depending on your money management system. Okay, in this case, the price moved all the way to here. So it wasn't 1-to-3, but it was 1-to-2 and something, which from my point of view and from my experience, it's a very good risk reward, considering that I'm using strategies which allows me to have a risk reward between 1.1 to 1.5 all the way to 1.3. Why am I using a low risk reward like 1 to 1.5? It is because I have a higher probability when entering the trades. Thus, I'm not expecting for the market to run too much in one way or the other. So for example, 1-to-3 in this case would have been a perfect risk to reward ratio for the strategy I'm using right now. But it went a bit lower than that and stopped somewhere at 111.89. Right now the price is trading around 112.44. It had a very nice drop. It remains to see if it goes lower than that. But coming back to this strategy, higher highs, same level or lower highs on the RSI, find the support level on the RSI, and see whether the price doesn't reach a new higher high and it breaks below. Right here, with an enter at 113 and a stop above 113.49, actually not above that level, but at that level, you can see that the price moved a bit up, but after that got all the way down. So the stop loss was not reached. In any case, it wasn't even close to it. Let's find another example for this scenario. Another thing I'd like to share with you is that this strategy is not fail-proof. So don't believe that the strategies you'll find and you'll hear about are fail-proof, are 100%, have a 100% probability of success, because it will never happen. So you cannot find a strategy which will give you 100% of your trades profitable. That is why you need to manage them in such a way that, combined with a risk-reward strategy, you'll end up making consistent profits on a weekly basis, on a monthly basis, and so on and so forth. So don't take it as a fail-proof, because there are scenarios in which you have a false break here, and after that the price moves back above the highs and makes a new high, and so on and so forth. This was a very good example because you also had here at this 113.49, as I was showing you, a very good resistance level. So you can combine multiple aspects when it comes to price action and this RSI strategy. You can combine the technicalities of a trend with support, resistance, trend lines, and after that applying the RSI to find out where you can see divergences when the price has a high probability to make a U-turn on the opposite direction. Let's find another example. I have here GBP/USD, and let me show you an example with GBP/USD. I was saying that we can have 1, 2, 3 highs or lows in a row. This time I'm going to show you an example on the downside. So we have a high here, we have a low, we have another lower low, lower high, okay, lower low. This is becoming very interesting, and we have a lower high. Look what happens with the RSI. You have high low here, higher low, and higher low. 1, 2, 3. If on the uptrend we will be looking at the highs in order to find the divergence, when it comes to a downtrend or down move, we should be looking at the lows in order to find this divergence. So uptrend looking on the highs, downtrend looking on the lows. So basically it's the other way around when it comes for the trend line. So uptrend for the trend line, you'll be looking for the lows, while for this strategy to find the divergence, you will be looking for the highs, and vice versa for downtrend. We have here the divergence, a very, very nice one. If we are looking closer, we'll see that this was a resistance area, 24.50, 24.60. It was a resistance area before, and going closer to our graphic, our chart, let's say we would have been around here. So we had lower low, and this would have been already a lower high. This situation, whenever the divergence starts, as I was showing you before, you need to check for the lows. And this one was an example. Let me show you the difference between them. The difference is on these ones. So you have higher high, higher high, higher low, higher low, and this one is already a lower high. Now in this scenario, you can use this level in order to trade, set your stop loss above the previous high and your target somewhere around here based on your risk to reward ratio. And this is the trigger point, the trigger. Okay, so this was the pattern I have shown to you a bit earlier. Now in this scenario on GBP USD, we have a different one, because if you'll analyze the price action, you'll see that there are only two ways in which a trend or a move reverses based on price action. And that would be either this one here, which resembles to a double top formation. And the second one is basically you have higher highs, and after the last higher high here, you have straightforward a lower low. This is a very strong reversal signal. So once you have higher highs, higher lows, and at the point right after a higher high you have a lower low, this is a very strong reversal signal. And after that you'll be waiting for another lower high before continuing on the downtrend, or maybe ABC correction, it doesn't matter. Basically, after a new higher, after a new lower high here, you will be expecting for the price to drop and make another lower low. Okay, so these are the differences between the two types of reversal patterns. So if you'll be looking on the market, I'm betting you that you will not see any other of these two. So GBP/USD, this was the first one, the double top pattern, and this is the second one, which is the second pattern I was showing it to you. Right now we have had the lower high broken, so it's an image in a mirror. Yeah, we have the lower high broken. We had another lower high, lower low here. Sorry for bubbling a bit. So lower low, divergence. Look what happens. We have here a higher high and a higher low. Now this is a very good area to find an entry for your trade. In this case would be 125.48, breaking the new high with a stop loss below the previous low, and continuing. Look what happened. We had at least 2 times our risk to reward ratio. At least 2 times. We actually had more than 2 times, 1 to 3 in this case. So lower lows, divergence, strong signal. Support area 124.56, and after that, as I was saying, you have a very strong reversal signal given by the fact that this high was suddenly overcome by a new higher high. So lower highs, higher high. This was again higher low, This was our entry signal, stop loss below 125.02, and in this case the take profit would have been somewhere around 126.85. You have 136 pips versus 42 pips for stop loss, even though the price came back a bit and dropped below 125.48. Didn't get the stop loss from here. Let us continue and see if we have other examples, a bit more clear examples. Okay, I found one on D30, which seems to be very interesting, because look at what we have here. Let's look on H1. We have a very good and strong uptrend. If we would like, we can continue a bit the price action with a trend line. This was a very nice trend line here, which was broken. And looking at the price move around here. So let's say we would have been on the uptrend, very nice. We would have traded the corrections, which were very interesting. Continuing, we would see that this would be a higher high found on the RSI as one of the highest levels, 87, and I would mark it. Now, coming back, a new higher high somewhere around here. The RSI didn't reach that level, so you already have a divergence. Continuing, new higher high, the RSI continues to make new lower highs, higher high and higher high. Now in this scenario, you would have, as I was saying, you have multiple examples. This is a rare one right now. You have a lower high here. Continuing, you have a lower high here. You need to follow them. Lower high here. And after that, let's see what has happened. Continuing, the price broke straight below this level. This is another type of, actually this is the same strategy, but a different type of approach. I've showed you already two types of approach, because you need to adapt based on different conditions. Whenever you have so many higher highs on the price and you have so many higher lower highs on the RSI, like here, you would also find the support level. If you are drawing this line here for the last ones, you will find the support level at 53.4, which had 1, 2, and a bit in the back. So we have a 33.4 support level, which was breached right here with the breach below 12,751.8. So in this case, when you have multiple higher highs, and this time not only 2 but 5 of them, and the RSI looks like this, then you can apply another entry strategy. This time the entry strategy is based on the previous low. So you have this low here, just like in the first model here. So you have a previous low breaking, but here you have a failure swing, so you don't have a higher high, and it broke down. In this case, for the 30, you had higher highs. You don't need a failure swing because you have so many arguments. And whenever the price does something like this, it usually breaks down with high volatility. So you are about to enter at 12,750 with a stop loss above the previous highs, because those are the most important and can actually help you decide whether the trend continues on the upside or it has reversed. And of course, use your risk to reward ratio to set up your take profit, which would be 1, 2, let's put 3 as a default, though it's your own choice how many you like to set. Entering here, stop loss 112.94, take profit, let's say around 12,100 or 12,200. Look what the price did. Came back up here, retested the resistance, and after that just dropped down quite a lot. The trend has changed. This has been a very, very interesting move for the D30, because if you were been looking at the price action, you'll see higher high here, another one here, higher low, and after that higher low. This one would be a lower high, and this one would be a lower low. So basically your entry based on price action would have been somewhere around here. But using this method of divergence combined with price action, resistance levels, support areas, and so on and so forth, everything I have said up until now, you would see that you will get very, very good entries with tight stops and also very good risk to reward ratios if you use it, of course, and it's very normal and it's recommended for you to use stop losses and take profits combined with risk to reward ratios and systems. Good. If you have any questions, please let me know, because it's very important for us to discuss and have everything set. Let me show you another one. This is US 30. So as I was saying in the beginning of this webinar, this strategy based on price action and RSI divergences, you will be able to use on Forex indices commodities with no issues to adapt, and also you'll be using it to stocks or whatever else you will be trading. Moreover, if you are changing the time frame, the strategy can still be applied from 1 minute, though it's a bit more complex to trade in 1 minute because it's very fast, all the way up to daily, weekly, or monthly if you want are interested in trading monthly. This video, as I was saying before, will be available for download. Please let your account managers know whenever you want to re-see this video, and they will provide you with a link for download. Okay, another example. This is very similar with the first one I have given you, which was the euro dollar. So we have here higher high. Look at this. This is a higher high. This is a higher high. But what happens? Well, this time the RSI has shown us a divergence. I'm not taking this one into consideration because this one is higher than this. This one is higher than this. Thus, the trend is still up all the way to here, where we have the divergence. Low, look what happened, low. Okay, we are following the lows, as I was saying. Following the lows, we also have a very good support here, given the previous low of the RSI, which is at 60 low. Look what happened. After this drop, the RSI already went below the support level, which was a very strong signal. Came back, retested. We had here a lower high. Let's change a bit the color. Let's put it red, for example. Okay, we had a lower high. And after this lower high, what were we looking for? Breaking the 27,129, which was the previous low, with a resistance at 27,637. This would have been our stop loss. The safest from my point of view. You can also use this previous high, but the safest point would be to use 27.6, which is the previous higher high. And Of course, looking at price risk to reward ratios, you wouldn't have had any issues to reach 1, 2, 3 in this scenario. Price even moved lower than that. Now, once again, there is another example here, but this example would have been very hard to trade because you have a steep move right here. You have a lower low, lower low, lower high, and look what happened. After this lower high here, you had divergence, but the price started to move up quite a lot, and only here gave you the possibility of a return. So the prices here would have been very hard to trade this price action pattern with 2 dips and a divergence on the RSI due to the way the market moves. So you had 727 pips here. You can imagine all the way up here, and after that a small correction. It wouldn't have been a proper use of this strategy. You would need to have something like this, something like this from here. So you need also the price action to help you in establishing good entry and exit points. That is very important because the RSI gives you arguments, and you'll know that you have a high probability for a U-turn in the direction of the price, but you will still need price action to filter out even more and provide you with good entry points, which means buying and selling, and also exiting points, which means especially stop losses, because the take profit can be given to you also by price action, like a resistance, like a support, depending on the direction of your trading, and also it would be given by your risk to reward ratio. RSI is relative strength index. It's basically a mathematical formula using the 14 or how many periods you'd like to give it from the chart. So it uses the price applied for a mathematical formula, which I don't know by heart. I'm sorry for that. I was not very interested in learning it by heart, but if you are interested, you can search it on Google. You'll find the RSI formula quite fast. And if you like to try it out, be my guest. But I have been using the RSI for the past 11 years. And in this scenario, with this strategy, it actually gave me one of the best strategies I have ever used. And that is because it is consistent in its signals, combined with price action and stop losses, the risk to reward ratio given. It is very consistent and has worked for me for a long period of time with very little adjustments. So if you have any questions related to this strategy that I have shown you, please let me know on chat. Number of RSI best for 50 minutes, 30 minutes, and 1 hour. Well, 30 minutes and 1 hour, I'm usually using the 14 RSI. So this is one of the most commonly used periods, 14. Let's say you would like to use M15. Now M15 in this case looks also very well with the 14 RSI, but it depends whether you like it to be smoother or more sensitive. From my point of view, M15, I would go for a 21 RSI. This is just for euro dollar, because whenever you're tuning your RSI or whatever indicators you are using, you should be tune them for the time frame that you are using, but also for the instrument that you are using. So if I'm using a 21 RSI for the M15 minute 15 minutes chart on euro dollar, for GBP USD I might use 23 or 25. It depends. You need to tune them a bit in order to provide you with better quality of your entries. The RSI, so another question is how RSI is used for support, resistance, and trend lines. The RSI itself gives you support and resistance levels. As I was showing it to you on H1 here, you had, this is H1, but you can use M30 because this was the one we used before. H1 also gives you a divergence on this chart, but a bit different one. So you have a resistance on the RSI here. While the price has moved up, the RSI has encountered a very strong resistance and didn't move higher, didn't create any higher highs. In the same time, you would have gotten a support area here at 44.4. So in this specific scenario, you had higher highs, though the resistance was all the way here, 113.50. The RSI stopped at 73.9 before crashing down below 44.4. So don't mistaken the types of support and resistance from the RSI with the types of support and resistance on also trend lines from the price action, because you cannot trade based on the support and resistance resistances given to you by the RSI. What you can do is to take note of the signals that they give. So breaking a support on the RSI provides us with another argument that the price has a higher probability to continue the move down, while breaking the resistance gives us a higher probability for the price to move up. But you still need to look at the price actions, which is the sequence of higher highs and higher lows, while on the downtrend, lower highs and lower lows. So once again, if you are using trend lines, support resistances on RSI, which I know and you will be encounter this information on the internet, you need to be very attentive, because trading based on the support, resistance, and trend line of the RSI, it is very tricky. It is a lagging indicator still. Indicators in general are lagging. Thus, sometimes you'll see that the RSI broke below the support level, its support level, but the price has not done that yet. So you would have had a support here, the RSI dropped below it, and after that the price shoots up and creates a new high. That's why I was telling you that you need to combine it very closely with the price action, and you need to understand very well price action. As I was saying before, 1 hour, 15 minutes, 30 minutes, H4, you can use this strategy on any time frame that you want, on any instrument that you want. You must need to understand it and test it, because if you change the time frame, you should also adapt a bit the RSI to be smoother or more sensitive. But this is only based on your trading style and the way you analyze the chart. Because if I'm very used to 14 and I don't need to adjust it very much from one time frame to another, you might need to do that in the future. So you need to test it and see which one. And this is just related to periods, because if you leave it on 14 periods and you just follow the price action and follow the highs and throughs for the RSI, it will still work very well on any time frame that you choose. From my point of view, the RSI, yes, is one of the best when it comes to divergences, because it also gives you support resistance, because it gives you the fact that trading above 70, you have an overbought market, and it's close to reversing. I will not trade with the RSI on the classic theory of going above and breaking back below 70, or going below and breaking back above 30, as you will be finding in different books or internet on the internet. So I would rather use the RSI for signals and reversal areas, but my trading is still based, let's say, 40% on this RSI idea of turning points given by the divergence, and 60% based on price action, because I don't know if you were very careful on when I was giving the entry signals, because all my entry signals were related to price action, breaking below a support, looking for higher highs or higher lows depending on the direction of the trend. So 60% of price action, 40% of RSI, because price action gives you better filtering when it comes to entering and exiting trades. Okay, thank you very much for being with me here. I hope you enjoyed this event. I hope you find this strategy interesting. Please test it out. If you have questions, please ask the account managers to provide you with the recording. And after that, we can have another event, maybe with another strategy in the coming weeks. Thank you very much for being with me. Have a nice day, and hopefully we'll hear from you again soon. Bye bye.